As promised, it's time now for Mike on the Money. Mike Giordano, financial advisor with Williams Wealth Management, joining us. Progress on inflation. We've been feeling it, but the latest Consumer Price Index report out today indicates that prices rose by 3.5% in the last year. I think our viewers would have guessed that. They're not surprised, but markets who really watch all of this are reacting. So Mike, let's start with today's inflation report. Where did we see prices move the most?
Yeah, I mean, they were kind of all over the board, but the biggest price moves were in energy, shelter costs, medical costs. A big one was auto insurance, right? Wow. And that's something that the Fed kind of watches because it can kind of be sticky. So prices were kind of up all across the board, services being the highest.
And these are all things that we can't do without. So third straight month where we saw prices rise more than the expectations, and that might be the key, right? Yes, that expectation we're looking for. Do you expect any re-acceleration of inflation?
Yeah, it's hard to tell. I mean, the inflation that we saw 2 summers ago where we got over 9% on CPI, that seems unlikely. Supply chains have gotten cleared up by now. They're more normalized. However, you know, this was the fear all along, is that if the economy is running really, really strong, are you able to really get inflation back down to 2%? Last year was unbelievable. I mean, every month it kept going down, 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 down. This is what we've seen so far this year. This is probably what you should normally expect, is some bumpiness, and it's been a little bit longer lasting. So it is causing some concerns that, you know, maybe inflation isn't going to be headed down to 2% in the near term.
Okay, and 2%, Jerome Powell and the Fed have said it's got to be 2% before we start reducing rates. Do they mean that?
I mean, that's the goal. So when you're not achieving your goal, you got to say that, you know, we're still going for the goal. If you change the goalpost, then, you know, it takes away a lot of your credibility.
You think any reductions by June or this year even?
No, I mean, it seems, so June was what we were expecting. You know, the market's been screaming higher since October because that's when people expected, okay, the Fed's done hiking, they're going to start cutting, so now it's just waiting on those cuts. And at the beginning of the year, we thought we were going to get 7 cuts, which is almost 2 full percentage points. Then it got pared down to 3. Now we're looking at 1 or 2, and there's plenty of people saying we might not get any cuts this year. So it's been a massive change.
So maybe that's what the markets are reacting to. What about our investments? I mean, the markets have been doing pretty well, kind of no matter what. It's been la-di-da about inflation, but are they going to react to this?
Oh, no, that's 100% right. I mean, the markets have been in a phenomenal mood. They've been super excited, and they're looking past a lot of these types of things. Even today, the market wasn't necessarily down that much given the magnitudes of what was happening. I would say, you know, in terms of your investments, think about where you're positioned right now versus what you really like to be positioned, how you really like to be positioned. And so I wrote over the weekend that, you know, if you're a madman driving through rush hour Atlanta traffic at 90 miles an hour, weaving in and out, and you haven't had an accident yet, don't go, oh man, the risks are over. I mean, I'm just that good of a driver. There's no accident. You got to really think through the fact that, like, there's still risks out there. So get yourself dialed back in as best as possible. That's the most important thing.
Mike Giordano, always great to have you with us. For Mike on the Money, we'll be right back.